longtime cross-border investment banker and now friend and supporter of F50, and it's great to have you all here together to talk about the later stage equity investment environment as well as the exit environment, which is of course an important topic to all of us as we're trying to realize value in companies we work with. So we have a terrific group here representing a nice and diverse set of perspectives. Right to my left is Connie Sheng, who has established her own growth equity venture firm called Nautilus, and prior to that ran all U.S. investments for Foxconn, and as a partner who did the same thing for Samsung. Next to her, Elise Huang, who was previously also a growth equity investor, but now runs one of the largest asset managers out of China, doing both fund and direct investments as the CEO of NOAA USA and also Gopher Asset Management. Then Alex Rusli, who is the CEO of one of the larger telecom services companies in Indonesia, which is majority owned by a company called Ooredoo, which is backed by Rocket Internet and that group. So very interesting set of connections there. And then at the far end, Chuck Comey, who is one of the most experienced cross-border M&A guys that I know, and has worked with a broad range of companies, including, for example, Tsinghua and Tsinghua Unigroup and others. So I'll let you guys each maybe just add to that a teeny bit in your own words for just a few minutes, then we'll get into it. Why don't you start, Connie?
Well, again, my name is Connie Sheng. I'm a funding managing director of Nautilus Venture Partners. As Brewer said, prior to funding Nautilus, I was the managing director of Foxconn Venture. And Foxconn Venture is this arm, investment arm of Foxconn Holding. And Foxconn is this largest, I guess, electronic manufacturers globally.
Hello everyone, thanks for having me here. My name is Elise Huang. I'm the CEO of LOA US. I'm a managing partner of Gopher Asset Management. LOA actually is the largest wealth management platform in China. Listed on New York Stock Exchange. We were ranked by Fortune as a few years in a row as the fastest growth company, top 50, right? So the company has experienced tremendous growth in China. Today we manage about 70 billion US asset under advisory. Then when the company went public in 2010, we also started the Gopher Asset Management business, which is more like a private equity arm of LOA. Today we manage about 17 billion AUM, asset under management. We are the largest independent fund of fund in China, and we also are an active direct investor. So we back about 120 funds, PE and VC funds, and over 70 plus GPs in the Chinese market. And out of that 17 billion, about 2.4 billion is in US dollar, so which we are actively investing in the overseas market as well. So prior to joining LOA, I was a US partner for West Summit Capital, which is a growth capital fund funded by several sovereign funds based here in the Silicon Valley. Then prior to West Summit, I was the head of US for Vertex Venture Holding, which is a VC arm of Temasek Holdings. So my past track record, including some of the direct investment in companies like Unity Software, Mirantis, Couchbase, Spectrum, IDG, and PayPal, etc. And also my past, I also cover some of the fund of fund investment for Vertex, Temasek as well. So that kind of hybrid combination of my past experience works really well for LOA and Gopher Asset Management.
Thanks. My name is Alexander Rusli. I'm the CEO of Indosat Ooredoo. It's the second largest telco operator in Indonesia with 88 million customers. Our revenue base is about 80 million, 80% coming from the consumer base and 20% coming from the B2B space. We are actually 65% owned by Qatar Telecom, which is now called Ooredoo. As Bruiser mentioned before, Rocket also has an co-investment with our parent company to invest in digital businesses in Indonesia. Why we here? Why I'm here in particular? We are looking at a number of different activities in the digital space. We see that Indonesia now is very much like China 10 years ago. There's a lot of new ventures coming up. There's a lot of players starting to come in, but still don't know how to come in the right way. A lot of mistakes are still made. We, as a telco, do incubate and put some money in funds, but the new paradigm that we're taking now is we believe that the best way for us to invest or incubate companies is by giving the resources that we have. We have about 250,000 outlets across the country. We have 88 million customers. Rather than getting in the way of and then we've seen so many telcos actually invest, and including us, have failed in the past by taking majority of control. Now we're letting the incubated companies or the companies that's run by with the right profile people, but giving our resources full on. So that's what we're here.
Hi, Chuck Comey. As Brewer mentioned, I do cross-border. I'm based here, but my experience includes 16 years on the ground in Asia, first in Tokyo for 9 years, where we started to represent SoftBank and are now their Global Transactions Council. So the $100 billion Vision Fund, the OneWeb, Intelsat merger, and the ARM acquisition are all deals that we've been involved with. And then after Tokyo, I moved over to Shanghai and opened our office there and was resident in Shanghai for 7 years. And I read and speak Mandarin, so my focus now is more China. And I think, obviously a lot of us touch on China. Some of the recent deals I've been involved with include the Walmart strategic alliance with Jingdong, JD.com for about $1.5 billion, and then Tsinghua Unigroup's acquisition of Xuedajiaoyu, which was the first A-share listed company acquisition of a US listed company. China Media Capital's joint venture with Jaunt in China for VR platform development, and they still pending take private in the tech space here.
Well, thank you, great group. So the first topic is to talk really about the late stage growth equity market, and as you guys know and has been discussed by prior panels, it's been through quite a wild ride. We've watched it obviously for a while. It was sort of grew with some maturity, but then as excitement built, you had this amazing entrance of a group of new players, including most notably many of the crossover funds that typically invest in public companies that started coming in to invest in private companies, often with different return expectations and structuring approaches from traditional growth equity investors. And you also had a very interesting group of new Asian strategic investors, SoftBank, Foxconn, obviously Alibaba, Tencent, et cetera, that entered the market, and with different kind of strategic objectives that impacted the whole market. And then, of course, we had the rise of the unicorns, and then a significant slowdown more recently. So I guess I'll start off by, let's bring that story up to date. And what are you guys seeing most recently in the market? And I think maybe we'll start with Connie, because you came at it from that very interesting perspective of working with one of the major strategic players in that market, and each of you can add your perspective by geography and focus.
So I guess one of the biggest late-stage company I worked on when I was at Foxconn was a $200 million single one-time investment in Gopher. So it was a last round before Gopher went public. And Gopher, obviously, as you can see, gone through a very fast rise, but then bump into some headwinds after gone IPO. But from the investment point of view, this was a deal fit exactly from a strategic point of view that there's a lot of things that between Foxconn and Gopher can do. And we see this company can leverage the brand they established in a relative niche market, but really leverage that and go broader on consumer electronics. But many of them maybe could tell that vision, that ambition could tell. However, you can see from that example is that from a strategic point of view, Asian investor is very interested in coming to invest in late-stage companies like GoPro, because at that stage, there's a lot more things a strategic company can work with that company, that startup company. And also, obviously, the path for that company to go even bigger, it becomes a lot more clear. And so this is one of the reasons, in fact, from my perspective, that I was able to leverage to say, hey, strategic investor is a lot better to invest in later stage company. That doesn't apply to every single one. In fact, there is a trend for strategic to go earlier stage as I see it right now. But what I was seeing 2 years ago when we were thinking about going for AI, going for IoT, those we thought was a relatively nascent stage opportunity. It would be better off to run as a standalone fund, but with LPs in the back of us, so that we have best of both worlds. Yeah.
Elise, you looked at this as a growth equity investor. Now you're looking at it more from a fund-to-funds perspective, as well as some direct investments. How do you see this market dynamic right now? How attractive is it for current investors?
Sure. I think in 2016,